we had a poll of almost 1,000 responses. 50.7% of people said we should raise it to 6,200. So investors are very bullish overall. In fact, if you take a look at systemic positioning, which is all the computer algorithms, etc., you take a look at Investors Business Daily Sentiment Index, you're going to have a bigger chart to get the optimism on stocks. Here's what you need to know before the bell this morning. Lately, it's been just a rocket ship of a ride for markets. Stocks have been surging higher, not just on the S&P, but on the Russell 2000 index as well, the NASDAQ. It's just been a very strong rally for stocks. Stocks got very overbought, as we talked about yesterday a bit. And again, just when you have these big deviations from moving averages, and that happened very quickly, the market rocketed up. We got very deviated from the 50-day moving average. As we've talked about before, that those moving averages just simply act as a little bit of gravity. That's it. And so they're going to try to pull prices back down a bit. And so we saw the market sell off just a little bit yesterday. This morning, futures are pointing lower. Right now, the NASDAQ's down about 44 points for the open. The Dow's down about 115. So we'll see a little bit of weakness here at the open. But again, a weak inflation print could certainly reverse that this morning. So again, don't read too much into futures at the moment. It's all just pre-positioning right now for that inflation number. But we are very overbought on a relative strength basis, which is going to limit upside here near term. So again, not surprisingly, as we talked about previously, we're going to see a little bit of volatility going into Thanksgiving, a rally after Thanksgiving, and then some more volatility the first couple of weeks of December. Then we get the Santa Claus rally into year end. So the markets will likely be higher. I took a poll on Twitter day before yesterday, and our year-end target for the S&P was 6,000. We had set that earlier this year. So again, with our year-end target met already, I put it out a poll. I said, what should my new target be for the end of the year? We don't change our targets. It's just we're right. We set our target once. We don't adjust them, and we're either right or wrong. And so far this year, we're wrong at 6,000. We'll see how we work out. However, 50%. We had a poll of almost 1,000 responses, and 50.7% of people said we should raise it to 6,200. So investors are very bullish overall. In fact, if you take a look at systemic positioning, which is all the computer algorithms, etc., you take a look at the overall professional investor, the IBD Sentiment Index, Investors Business Daily Sentiment Index, you're going to have a bigger chart to get the optimism on stocks. But we talked about earlier this week about consumer optimism on stocks. There has been just no previous point in recent history where investors are as optimistic about stock exposure as they are right now. And a lot of that optimism has come just since the election because everybody's expecting rate cuts, which I think is a little bit interesting because, again, further rate cuts are going to be a little bit more challenging. Just in extending the current rate cuts is most likely, right? That will just extend and make permanent the Tax Cut and Jobs Act from 2017, but trying to reduce corporate taxes further from, say, 21 to 15 might become a bit more of a challenge. We'll see if that happens or not. But a big chunk of this rally is on expectation we're going to get not only an extension of current rate cuts or tax cuts, but even further tax cuts. We'll see what happens. But again, there's a lot of optimism being built in stocks right now. So again, there's nothing wrong with that. Things are very positive right now. Stocks will be positive into year end. 2025 is going to be a little bit of an interesting story because when you take a look at earnings and earnings revisions, if you take a look into 2025 from earnings revisions, the Magnificent Seven are expected to grow earnings at 17%. The other 493, a negative 3% earnings growth rate next year, giving the S&P 500 almost a zero rate of return in terms of earnings growth revisions for 2025. That's going to be hard to justify valuations at these levels. So 2025 may be a bit more of an interesting story, but we'll talk about that when we get there. But that's what you need to know before the bell this morning.